Test, test, test. Test, test, test. What do I see? Test, test, test. What do I see? All right, I think I am live. Now, can I... Says I have a good connection. Can I share this stream? Aha. There I am. There is me. Aha. There I am. There is me. Okay, now can I share it? Aha. There I am. There is me. Okay, now can I share it? Aha. There I am. There is me. Copy the link. Can I share it? Aha. There I am. There is me. Copy the link. Can I share it? Aha. There I am. There is me. Copy the link. Can I share it? Aha. There I am. There is me. Copy the link. Can I share it? Aha. There I am. There is me. Copy the link. Can I share it? Aha. Okay. All right. And then, let's see. So this is the unemployed value degen. This is my very first ever live stream. I've never done one of these before. And let's see. I wanted to take a look at sector rotation. I wanted to brainstorm for the last quarter of this year. We have 2 months left. And maybe the first quarter of next year. What's going on in these sectors? And obviously the big thing is AI. So IT and communication services. Actually, was it? Let's see if I can find this. Warren Pies posted this pretty well. Put this chart up that said Warren Pies at 314. Ever since the non-farm payrolls in August came out, you had consumer cyclicals just crashing after that, and artificial intelligence rising. It's like the entire public markets, everybody looked at their portfolio and said, is this artificial intelligence related? No, well, I don't want it anymore. Goodbye. Which is interesting because, you know, it's true the labor market is on the weak side, but we're in an interest rate cutting cycle. And I think there's a difference between the labor market being weak because of nobody hiring because of AI disruption versus because of a financial crisis or something like that. So I think this is probably going to be a place to look. Now, let me look in consumer discretionary year-to-date 7.21. I think the problem with that is you have Amazon as the largest component, and Amazon has all that AWS revenue. Now, if I look at year-to-date of the components, oof, textiles. I just wrote about a textile company. It was Unify. That's a real value degen chart. I mean, that's really bouncing along the bottom. Let me look at the small cap consumer discretionary, PSCD. Not terrible, and without the effects of Amazon in there, so that's for the year, not up for the year. It's had a golden cross in August, and now it's below the 50-day moving average, and it's holding above the 200. The RSI is oversold. I think small cap consumer discretionary is a place where I could want to be adding here in the end of the year. I mean, there's going to be tax loss harvesting on individual names, but we're in an interest rate cutting cycle, and I think I want to move small cap consumer discretionary to the top of the list. Let me see if I can possibly figure out if there is I have somebody in the chat, and I can see the chat. I have somebody say, talk about uranium and Savannah-Stillwater. Fair enough. Uranium, I gotta get my commodity chart open. Where's my commodity chart? As I try and find, I have too many bookmarks. I need to clean this thing up. Where is it? Where is it? I know it's in here. There it is. I think it just broke out. I think it just broke out, you know, within the last couple of days. Yeah, let me go to the 5-year. Okay, so was it above 86 was a big threshold? And there's also, correct me if I'm wrong, but the spot market doesn't mean much. It's the futures market that everybody looks at. Yeah, so the uranium market, I had done a 3-part series called the, was it the Uranium Tour Guide? Actually, now I think it's a 5-part series because I also wrote about Souls, the spinoff from Honeywell. When I did that, my strongest buy, and it was at $40 a share, was Centrus Energy. And I have recently, so to go back 2 years to see where I wrote about it, kind of summer of last year when it was $40 a share. I think it was July. So that's not bad to be almost a 10-bagger in a year and a half. And then I told everybody to sell, that at some point the nuclear narrative, people are going to get bored of it, and these prices might not be sustainable for their cash flows in the, you know, maybe the 2, 3, 4, 5-year term. Because Centrus Energy has competition now. They've got serious competition from BWXT, which is, well, 20 billion, but they also do the small modular reactors for the Navy. I think they actually make the fuel rods, and they've got a much bigger business. But that also is it's more than a double, and it was already an expensive. It's a price to earnings of 66. Just have such a hard time seeing it growing into that PE ratio. I feel like these things, they have to have some air let out of them at some point. Price to earnings of 60. Now, the Honeywell spinoff, Solstice Advanced Materials, just spun off, and there's not even any data on it yet. In the press release and in my write-up, I might be able to, because I wrote down what the revenue was and about what the market cap would be. Let me see if I can find it. So I did, this is the 5th part in the series. The 4th part was ASP Isotopes, which is not a bad little company. It just isn't going to be relevant for, you know, this rally of the nuclear race. Things are loading a bit slowly. I also had written about Energy Fuels, which that is now almost a $5 billion company for such a small revenue base. I mean, they have, Energy Fuels has 2 currently working uranium mines, and they have 2 more mines that they can bring online. You know, the infrastructure is all built out. They just have to reactivate them for, I think, $100 million of working capital for 1 million pounds of uranium production. It's pretty good, but still a $5 billion company for that. It seems overpriced. And then UEC, Amir Adnani's company, $7 billion. And my write-up, I did part 1, 2, and 3 was about UEC, Energy Fuels, and Centrus. And Amir Adnani is quite a promoter, but he gives me, you know, just a few bad vibes that I'm not super comfortable with it. Energy Fuels, the head of that company, I don't want to talk too much smack about him, but if you have 30 years of experience in uranium, you're in a dead industry. You know, where do you have to graduate in your class before you spend 30 years in a dead industry? On earnings calls, he strikes me as, you know, not the sharpest tool in the shed, but he is, you know, building a pretty stable business. So do I want a flashy promoter and that gives off a few red flags, or somebody that, you know, when people ask him what's your uranium strategy and all he wants to talk about is monazite? It's like, dude, the market wants to hear about uranium. And he's like, yeah, but did I tell you about our monazite strategy? It's like, I know rare earths are popular now, but I just feel like the whole space, some air can be let out of the tires. My post on Solstice Advanced Materials, let's see, I had put some of the revenue down here, and is it 3.8 billion in sales? Let's see, and only a chunk of that was the nuclear. 12% was the, actually I can zoom on this. So Solstice Advanced Materials has Converdyne, which is the only way to own uranium conversion. And they've got a bunch of other stuff too, and the other stuff is chemicals, and chemicals are in the toilet right now. And I can't even see the market cap of, I wonder if I can see the market cap of Solstice Advanced Materials. I think it spun off officially trading on Friday, or if it was trading before that a little bit, but it on FinViz, it won't even tell me the market capitalization. Let's see, will any of these websites have me the market capitalization? So I've got 7.1 billion. So it's trading at more than, now if I was going to compare, do I want to own UEC, Amir Adnani's company, for 7 billion, or do I want to own Converdyne, 100% of the facility and 50% of the marketing arm, for 7 billion? I would take Solstice Advanced Materials. So at that valuation, 7 billion for, and if you look at the sales, they've got about 450 million in revenue for the uranium and a $2 billion backlog. That's almost exactly the revenue and half of the backlog of Centrus Energy. But Centrus Energy still doesn't have their manufacturing facility built up. They're still importing from Russia. So if I look at Centrus Energy, LEU, which now has a almost the $7 billion market cap for almost identical revenue as just the Converdyne component on Solstice Advanced Materials. It's like they're equally priced, but you're getting the rest of the company for free. So I would take, I put this flip of the coin because when it finally does the IPO, is it going to be up or down? And check out Sols. I think it's cheap enough here. 45 bucks, $7 billion market cap. Chemicals are so hated it could fall more. There's no history here. There's no technicals to say if this is good or bad, if it's going to, you know, find a floor. I could start a small position in Solstice Advanced Materials. And then in the chat, I was also asked about Sibanye-Stillwater. And I talk about this on my weekly paywalled video. I had sold out about 11:15 or so, and so I've been playing cute now. I've been trying to time these dips and these rallies, and so I sold out about 8:50. No, actually, this one I timed the top perfectly. I sold out at 9:50. I missed the bottom, bought back in at 8:50, made a little trade. This one I sold out about 11:15. Now it's about 10:56. It's probably about time to buy back in. I'm just when the position tripled, I could stand to trim it down some, and instead of trimming it, I've been playing with it, and I think it's time to buy back in now. So it's not overbought on the RSI. The 50-day moving average might provide some resistance there for it to bounce and rally. I don't know if it will spend any time below the 50-day moving average. And the MACD, the selling pressure is easing. So yeah, I think Monday might be time to buy back in. And I'll go over this on my weekly video call. The purpose of today's call was to look at the sectors, to go into the sectors and say, hey, where do I want to be positioned for the end of the year? And the sectors, somebody put a great meme about this. I want to see if I can find it. Well, I could just tell you about it. It was pretty much Gordon Ramsay. If you've ever watched MasterChef, the children's version, he's so loving, he's so kind. You know, hey, he's don't worry about it, we can fix it. But if you watch, Hell's Kitchen with Adults, he's like, you donkey, you idiot sandwich. It's just a totally different Gordon Ramsay. And it feels like if you're not connected with artificial intelligence in any way, everybody's just throwing you out of the portfolio. And I don't know how long that's going to last. The data center build out. So some thoughts are that the data center build out the narrative is going to end, and the torch is going to get passed on to agentic AI. That these companies that make these agents, and I do have a write-up coming out for Monday on a very small Canadian listed company that has a healthcare agentic AI. When that torch gets passed, I don't know if it's going to make some relief for some of the other sectors. And also some of these are going to be primed for a January rally after the tax loss harvesting. So consumer staples, let me go to consumer staples. So that's PSCC. Ooh, that is a brutal chart. But you know, it's oversold. It's past the previous, let's see, how do I have here? 2 years? Go to 5 years. If I was going to play with some crayons, how far can consumer staples go? I mean, not that much more. I generally don't like consumer staples very much anyway, but they just don't have the torque. I mean, even if you find a great company and you catch it at the bottom and it rallies, it's up like 30%. So it's not my favorite world. But small cap consumer staples, it's oversold. I'd have to zoom in a little more. It's not reached this quintuple bottom yet. It's here, kind of closer to this. It's actually below that triple bottom there. So it's broken through the resistance line. It could continue to fall. I just hate consumer staples so much. So why would I do consumer staples when in an interest rate cutting cycle I can go to consumer discretionary, which they have rallied off a lot from the April low, right? So consumer discretionary has come off the April low a lot, and it's consolidating. It's not crashing below the 200-day moving average. It's just consolidating. It's still a bull market, and now we have an interest rate cutting cycle. So I think consumer discretionary is not a bad buy here. It's getting to oversold in the RSI. And then let me just check the MACD. Selling pressure is increasing on the MACD. That's not great. And then what other sectors? I mean, obviously the the AI build out is just unstoppable. So this is small cap information technology. I do have one small cap information technology stock. It's Cogent Communications. It's definitely lagging this index. And then what is the communications? PCU. Is that utilities? That's utilities and communications combined. Small cap utilities and communication services. I don't know why they lump those together. Just had a golden cross. It's not overbought. MACD is declining. It's still below where it was last fall. I mean, utilities, if you look at the large cap sector, utilities are one of the strongest of the year, up 17.5% for S&P 500 utilities, but I think the large utilities are different than the small utilities. I'm just not eager to jump into that world. What is it? Materials. It hasn't really been oversold since April. I mean, materials has been an interesting place to be. It had a golden cross in August. Had a huge volume spike on that dip. Let's see. What's the components of materials? What's going on in materials? So if I go to year to date on materials, containers and packaging are down 20% year to date. Chemicals are only down 5%, but individual chemical names looks like they've been destroyed. Construction materials have had a strong year, and metals and mining up 50%. Yeah, so I don't have it in me to chase things like that. I actually sold my container and packaging company. I had done a write-up on Ryanair Advanced Materials. Maybe I sold it too early, or maybe it's time to buy back in. Ooh. So you had a golden cross just this month in October, and it's probably going to bounce off of that 50-day moving average. So just from a trade, I'm going to write this down. Just from a short-term trade idea, Ryanair Advanced Materials has a pretty nice chart for that. So I had, when it was about 750, and I had written about it when it was, I don't know, 375 in June, I told my subscribers, look, if you double your money on a paper mill, just get out of it. But I had put a $10 price target, and it might really be due for that next, maybe in the next 5 months, 6 months, it's due for that next leg higher to $10. Because packaging, I didn't realize packaging was underperforming so badly this year, because chemicals are what feels like are completely destroyed. I wish I could see the components of what's going on to this Fidelity large cap chemicals. Well, maybe it's maybe Dow, let's see, Dow Chemical and DuPont. Maybe they're holding up better than their no. How can chemicals be down 5% when Dow is down 50%? I had written about LyondellBasell. That's down outrageously. I bought some Orion Engineered Carbon. Oh man, that was just so brutal. This was a $20 stock. Insiders were buying when this was a $20 stock. Insiders are still buying. Advanced 6, ASIX. This one's down. This one's so interesting because they're it's about to form a triple bottom here. This one's so interesting because all of their inputs are from within the US, and most of their outputs are sold within the US. So if you have bulky outputs plus tariffs, there's no competition they have to worry about from China. China has to compete against the 47% tariff. So, but what's amazing is chemicals here. It says year to date, the chemicals industry is only down 5%. That's got to be a composition thing because all the chemical companies are down 50%. Meanwhile, it says packaging is down 20%. So materials, chemicals and packaging, chemicals and maybe packaging. Because packaging is going to move when the economy moves. On interest rate cuts, if we get into a boom, that's gonna go again. Let me make sure I'm paying a little attention to the chat. Somebody's asking thoughts on the quantum sector. I think quantum is so far away from having any sort of real world application. But one thing that's interesting about quantum is that it has a threat to the cryptocurrency world. If quantum computers could crack those passwords, so that lingering threat, people that say, okay, quantum computing in 5 years is going to be able to crack Bitcoin, that might be keeping the cryptocurrency sector depressed because everybody was expecting a huge rally in crypto and it didn't come. And I wonder if that's the reason. So I don't know if that narrative changes, but I would not own any quantum stocks. To me, that I don't see a business case there. And then Silex, I didn't do Uranium Tourist part 6 with Silex, but a lot of people recommended it to me. Oklo, NuScale. So I haven't looked at the small modular reactors. They're so far away from their business case, and also people don't appreciate that the Navy has been using small modular reactors for 60 years, and BWXT makes them. So Oklo and NuScale have to compete against an entrenched $20 billion market cap defense contractor. I wouldn't, I'm not underestimating the tech bros. I think they could do, they could make some interesting products, but there's already an established, entrenched small modular reactor company. It's just, are they going to, what are they going to do about it? Somebody asked about Souls. I just talked about that a moment ago, but it doesn't have enough. It doesn't have enough trading history to get any technicals. But just looking at the market cap of it being $7 billion and comparing it to Centrus Energy, I think Converdyne within Souls is even better than Centrus Energy, and Centrus Energy is almost trading at $7 billion. So it's like if you buy Souls for Converdyne, you're getting the rest of that Honeywell spinoff essentially for free. And I told my subscribers to shave half of their Centrus Energy. There was even you could put out some 2-year covered calls and take so much off the table. And even though I think over 10 years nuclear is going to be such a huge structural change, these stocks have some air to let out the tires. It's just you can't stay at a price earnings of 60 because it's going to be a 10-year process. At some point in the 10 years, it's going to give that back. People are going to look at the cash flows and the profits and say, no, this is not worth holding on to for the 10-year story, and it'll be a buying opportunity again at some point. But yeah, the purpose of this is to look at sectors. And year to date, consumer staples, I just can't bring myself to do it because it's such a bad sector. It's so low torque. But real estate, let me look at real estate. Let's see, where's that PSC? Is there a real estate, small cap real estate ETF? Okay, so what's the best small cap real estate ETF? Roof. I think that might be the home builders. Let's see, PSCF, that's what I was looking for. That's financials. What is this telling me? Financials. Does financials have REITs inside of it? I hope not. Yeah, I'm not finding a good small cap ETF for, let's see. I can look at financials. Financials got hit. Small cap financials have a lot of exposure to regional banks. And I did write about this, how I thought about the private credit blow up wasn't particularly, I don't think it was particularly threatening to the regional banks because it's only 1.5% of their assets is those sort of private credit funds, those asset-backed securities for car loans. It's too small. But financials sold off a lot, and I think financials is going to have a really good run. But I don't like the banks. I do like rocket companies. Oh wow, it's almost back down to the 1650. So I called it as a technical trade on my 1-hour video for Rocket, and it came back, it crashed, had amazing earnings. Their home equity loans have doubled. I think this is a really strong buy for rocket companies. SoFi, I exited because I think it's 8 times price to sales. I mean, it's growing aggressively. It's doing really well. But 8 times price to sales is where me as a value investor, I go, no, I'll wait for the dip to buy. On the MACD, the buying pressure is weakening somewhat, not aggressive. It's not overbought. Yeah, nothing moves in a straight line. I feel like this, I mean, this is a very healthy channel, a very healthy trend line, but 8 times price to sales, I just can't do it. So I feel like I'm happy to buy SoFi back in, but not at 8 times price to sales. I like the company as a financial. I also have PagSeguro. That one, I think if you look back longer, I think it might be, yeah, there we go. So it crashed from the 50s all the way down. A lot of this is just the Brazilian currency, and it's broken out above the 200-day moving average. It's had a golden cross in May. It's kind of in this, it's hitting some resistance. I can draw a channel there. Where's the resistance line? Was that a triple top? Right, that's, you know, past support becomes future resistance. This $10 range, I think once it breaks above that $10 range and stays above it, I think it's probably off to the races. I really like PagSeguro a lot here. And with the reforms sweeping across South America, you saw the election in Bolivia, the election in, I think, was it Peru, and then Argentina, and Colombia is next, and what else is it? Chile, Colombia, and then Brazil. I think there's a chance you get huge market-oriented victories all across South America, plus maybe regime change in Venezuela. This is the Argentinian, this is an Argentinian conglomerate, but they do own a bank. I think maybe 15% of their market cap is attributable to a bank that they own in Argentina. And yeah, on that election news, it just shot up from 11 to 15. And now it's just, you know, back to where it was. But now Malay can put those reforms in. It is overbought. I think it'll consolidate here before it breaks out again. I'd also written about the Colombian bank. Wow, isn't that just a beautiful chart? I think I wrote about it here at 35 or so. Didn't expect it to just wow, that's one of the most beautiful charts. It's just been grinding higher in a straight line. This is the you know, the large public bank in Colombia, and but it also owns a bunch of other, Ecopetrol owns a bunch of other stuff too. This is while they have a literal guerrilla fighter as president, but I think the smart money, I think everybody knows he's going to lose the next election. His party has lost every municipal election in the last 2 years. And then there's Ecopetrol. Yeah, I think buying Ecopetrol here is probably a gift. I probably should do a write-up on Ecopetrol again, because the price of oil is what's dragging this down, but they own so much stuff that's not oil. They own a bunch of infrastructure all over South America, toll roads and power generation and power lines. What happens is whenever the communists have power, they don't have any return of capital to shareholders. They just have Ecopetrol keep buying more stuff, and the stuff that they bought is just all over the continent. Yeah, but I think the president's going to be out of power, and then I don't know if they'll be able to do any spin-offs, but I think Ecopetrol is a buy here, although it wasn't going to talk about oil. So what was I on right now? It was I was looking at financials, and I was looking at Bancolombia. I can't bring myself to buy a chart like this, but I would have to redo my write-up and see what the valuation metrics look like, price to book for a bank and all that, and what other assets they hold. The thing that I really like in Colombia is too thinly traded to buy any. And it doesn't even show up here in this. I'd have to go on Yahoo Finance, but it's really too publicly traded. The symbol is GIVSY. Let me see if I can find it. Grupo, so this is like the URSA of Colombia. So if you're familiar with Argentina's URSA, this is, but look at the volume, average volume 3, volume 200. It's so thinly traded. There's pretty much no shares available to trade at any time. But if you look at the holdings of this thing, it's such an enormous conglomerate trading at such a cheap price. If I could ever buy any of it, I don't know if Interactive Brokers allows me to buy things that are listed on the Colombian Stock Exchange itself. But this one, this might be the most undervalued thing in South America, because the election in Colombia is one of those things that's a slam dunk. Well, sometimes the things that everybody knows turns out to be wrong. I think in this case, everybody knows he's going to lose power, and he's going to lose power. It's just a massive conglomerate trading at such a huge discount. Let's see. Braskem and Sasol, I'm familiar with chemicals. So the thing about chemicals is to buy something that's not going to die in the down market, because the down market could last longer than we all think it's going to last. I go to FinViz, and so Braskem, I think, has, you know, maybe 1 or 2 years of balance sheet that they could possibly survive, and something like A6, they've only got about 400 million of debt on it. And if I look at interest expense, I don't know if this shows interest expense so well. If I go to the balance sheet quarterly, total liabilities, long-term debt's only 330 million. Current liabilities, they've got some accounts payable, but they've got inventory too. Where is their interest expense as a part of their income statement? Interest expense, $2 million a quarter. That's nothing on 400 million of revenue. But if I look at Braskem, $400 million market cap on a $10 billion enterprise value. This thing, I mean, if it survives, it's great, but where's the interest expense? 246 million, still on 3 billion of revenue. It's not bad, but well, compared to their operating income, their interest expense, it's not a, they're not strong to survive. If chemicals stay in a 2-year downturn, Braskem might not make it. If chemicals stay in a 2-year downturn, Advanced 6 is almost certainly going to make it. When I wrote about them 2 years ago, they had like 3 years worth of cash, but now it's been 2 years, so they don't have 3 years worth of cash anymore. 1.8 billion of cash versus accounts payable. So yeah, they don't. What's their run rate or their burn rate? I'll go to cash flow. Trailing 12-month cash. So they're burning through, $500 million in the last 12 months. Operating free cash flow -1 billion. Yeah, I mean, when I wrote about them 2 years ago, they had 3 years of cash. Now they have 1 year of cash. So I'd rather go with the chemical company that will survive, or at least I'm happy is going to survive. Current thoughts on Transocean. Well, I can talk about this because I was looking at the idea is sectors. What sectors to jump into? And if I go to energy and I look at the components, well, there's only 2 components. There's oil and oil services. But if I go to oil services, what is oil services? Is it OIH? Oil services just had a sudden massive spike because oil services is also natural gas services, and natural gas services are needed for the data center build out. So if you followed ProPetro announced a data center supply contract, and then it goes up 52% in a day. And now when people are asking themselves in their portfolio, is this an AI stock? Suddenly, check out AC/DC on Sympathy. Suddenly AC/DC is an AI stock because they can service these natural gas plants for the data centers. So that's a big narrative shift. This thing was pinned underneath this $4.20 range for a while, and now it's broken out. Might get rejected off the 200-day moving average though, but so my portfolio is so full of oil services, it's hard to buy more, but I think I'm gonna buy more. Somebody in the comments are asking about the offshore. Transocean has a beautiful chart. Might be getting some resistance around 4. Let me go to 5 years. Just play with crayons and see where the resistance lines might be. That was one. So where's the resistance line fit here for above it? Is it $5? Is that, I mean, it bounced pretty hard off of 4. Yeah, 4 is, yeah, I mean, it's bounced off of 4 a few times. I would think $5 might be for, there's a lot of resistance lines here because it spent so much time chopping around this range for it to really have that breakout. But I think this might just be something that, look, I mean, this is just a super healthy channel and it's staying within it. So it's going to take time, but it's going. Just let it go. Yeah, I think Transocean's doing really well here. It just had a golden cross. It was a little bit overbought, but it's consolidating now. Buying pressure is weakening. That's not great. But other than that, it's a great chart. I like Transocean. Let's see. Have I been following New Fortress Energy? It's looks like there's going to be some kind of dilution. New Fortress Energy is doing a debt restructuring in the UK, which is a favorable court for that. You know, Wes Eden's still going to put up the good fight. It's been such a dog. I'm not super happy about it. Would love to hear about Abacus Life. Oh yeah, Abacus Life, and I talk about this on my weekly paywalled videos. That's my #1 buying stock, even if the chart doesn't look good. Let's see. All right, let me go back to the so sectors. Oil services. Oil services. Now I already own too much, but oil services is now an AI play. Not offshore yet. Offshore is still oil, but it's the onshore oil services that tap into natural gas, and natural gas is now for AI. So that's a game changer, and it just happened 2 days ago. 2 days ago, ProPetro went from $5 to $10 because data center contract. So who else is going to get a data center contract? People are saying things like, I don't own any land bridge, I wrote about it, but land bridge is looking mighty attractive here. Hasn't been public that long. Yeah, as far as who's going to get a data center contract, yeah, so that's the, yeah, where's the resistance lines? That's a quadruple bottom, top, yeah. Anyway, if you're going to ask who's going to get the next data center contract, land bridge is a really strong possibility. Texas Pacific Land. Texas Pacific Land is a really strong possibility. Now, it's kind of expensive for me. I don't own any, but very good odds of being a data center build-out beneficiary. It's a consolidation range. Blackstone Minerals, their East Texas assets. Oh, wow. It was at, was that forward you? I think it was, yeah, it was at like 11 something when I looked at it last. So this had a pretty nice bounce back in September. Could get rejected off of the 200-day moving average or not. It's probably about 2 months away from making a golden cross. Blackstone Minerals, I think they're going to have to announce an increase to their dividend at some point if natural gas volumes pick up, but that could be a while. Yeah, that's a huge natural gas royalty company, limited partnership, or natural gas MLP. Let's see. Somebody's asking, is this glitched? Let me know in the comments if something is glitched out for you, if there's something not working. Back to the sectors. So which sectors have been lagging? Talked about staples. Real estate is... So the thing about real estate, let me click on real estate. What makes real estate so hard, let's see, REITs. So you had 2.2 million people self-deport so far under the Trump administration. If you're losing 2.5 million people a year for 4 years, if the country loses 10 million people, I think it's going to be hard for home builders to do well. But there are some exceptions because wealthy people sometimes want to live in a newly built home for all the bells and whistles. So it's going to depend on the region. So the St. Joe Company, they're a real estate developer, but they're in the panhandle of Florida. And if 10 million illegal immigrants leave the country over 4 years, it just doesn't affect selling beachfront property in Florida. Their lots went from selling for $80,000 to $150,000, and really it just blew out the quarter. It was amazing. So that's a real estate developer that I think is going to do well. But I wouldn't want to own too many home builders in the self-deportation environment. And then REITs. With interest rate cuts, REITs should benefit. And in May, we're getting a new Fed chair. So REITs are a real possibility. I kind of think of them like utilities. I don't love them because they just don't have that much torque. But if it's paying an 8% dividend and then the price also goes up 20%, you can have a really good year. Let's see. Real estate management and development industry, that's the home builders, and they've done all right. Let me look at Douglas Elliman. That's the high-end real estate developer. I think they're cheap here. They've been in this range several times, and I want to say this is making a bit of a floor. I don't think it'll stay under 250 very long. I think this is due for a bounce. It's about as oversold as it's been for all of this year. It doesn't get much more oversold than this. A little bit of selling pressure, not buying pressure, but I like Douglas Elliman here. They're that a real estate broker that has huge volumes in Miami. And this is another, if Zoran Mamdani wins in New York, this is a huge beneficiary. All the people that are going to leave from New York to buy a condo in Miami. This is the real estate broker that's going to handle all that stuff. let's see, what else is in real estate? There's just, I don't want to buy much in the US if we're going to lose 10 million people over the next 3 years. I did, for the Argentina thing, I did buy El Crasud. Look at that. Oof, that's beautiful. So I was telling my subscribers to buy it on this dip after that election around 875. So in a month, going from 875 to 12 is pretty nice. Saying thought they were commercial. No, Douglas Elliman is not commercial. They're mostly high-end luxury real estate. And then of course there's Open Door. That's quite a consolidation period, you know, and it's just been really well behaved, staying above the 50-day moving average. Zoom in a little. When you see this behavior that it just every day that it falls below the 50-day moving average, the buying pressure comes in and brings it back up. You get a nice hammer candle there. This is still a really well-behaved chart. That makes me think that the bulls are going to win. I think they announce on November 6th. That's this upcoming week. This is what they call a bull flag pattern. Yeah, it went up so much. It's become 15% of my portfolio. And I only trimmed once, and I probably shouldn't have. I think this thing on the next leg up is going to somewhere between 15 and 20. I wouldn't be surprised if it's 21 bucks a share before, you know, within 6 months, because the management team that it's got, there's no reason it shouldn't trade at 3 times price to sales. Let's see. How long do I think we'll have to wait for offshore day rates to increase? Probably 2027. Frontline, Okeanis. I haven't written about shipping stocks in a while. Okeanis Eco Tankers was my favorite tanker stock. Wow, that has done very well. Or was it 2 years ago when I wrote about it last? Yeah, so my favorite shipping company, and that's Hooker Furniture. What am I looking at? Hoeg LNG, HOFT. I can't even find the symbol. My favorite shipping company is Hoeg Autoliners. What the heck is the symbol? I own some of this. I put some in my wife's Roth IRA. What is the symbol? HAUTO. Is it not showing up here? Might be on the wrong index to show up here. Hoeg Autoliners OTC. HOEGF. Does it show up here? No, Hoeg doesn't show up here. So I'll have, but that's my favorite. My favorite shipping stock is Hoeg Autoliners. Let's see. Yeah. As far as shipping stock, so what I had written about Navios Maritime Partners. You have that. How many years out is this? 2 years. So you have the. It's so, from a pure price to book, it's so cheap. But then when you add in that you have Greek management, and there's just such a hatred for owning the Greeks, and then also they take all their cash flow and buy new ships, but then their competition is reluctant to buy new ships because now the order book is big. So it's kind of a first mover advantage. It's kind of a prisoner's dilemma. And what is her name? The lady that controls this company. She did this, just plowed right through the prisoner's dilemma and just started ordering more ships, and went to her competition and said, look, I'm building, but if you guys build, then the day rates are going to crash. So what are you going to do about it? And it's very ballsy, but I've written about Navios Maritime Partners. I don't own much. The price to book on it is so cheap. I'm always attracted to buy more, and then I get burned by Greek shippers. Yeah, my favorite is Hoeg Autoliners. It doesn't have a symbol on this stock charts tool. I don't know if I'd want to buy any other shipping companies. But it's a global cutting cycle. So the odds that global volumes increase are very good for any kind of shipping. And then at the same time, you have this tariff rerouting stuff. Anytime they reroute trade patterns, it usually increases the number of ship days and ship miles, things like that. So shipping is probably smart. It's just finding a good company. The last shipping company, I'd had a dry bulker that I really liked, and they sold out at a terrible price. And Howard Marks was in it also. And they bought him out privately. So he asked to be bought out at a premium to the share price, and they did it. And they turned around and agreed to be acquired in an all-stock transaction by somebody bigger at less than they paid Howard Marks for his exit. It was really a terrible shareholder unfriendly situation. I think I need to look for something a little more shareholder friendly than shipping companies. But back to the sectors. So real estate, materials, energy, healthcare. Healthcare has been lagging, but it's coming back some now. Ever since, let's see, the providers and services are down. Life science tools, if you're making the equipment, if you're making MRIs, healthcare equipment, biotech. Biotech is good. Biotech is always good. In pharmaceuticals. Let me look at some of this healthcare stuff. PSC, is it going to be H? Healthcare ETF. Yeah. Ooh, look at that. Small cap healthcare making a golden cross. And maybe it's not a perfect hammer candle on Friday, but it's a pretty good one. Not overbought. MACD, yeah, not perfect, but I think small cap healthcare is the place to start deploying capital to for the rest of the year. I think I'm going to move this to the top of the list. Small cap healthcare. Winner, winner, chicken dinner. I think I have my answer. It's for what I want to focus on for the last part of the year. I mean, there's other things. There's, again, packaging, chemicals, oil services, consumer discretionary, but small cap healthcare. Golden Cross, not a perfect hammer candle, but yeah, I think it's the time for small cap healthcare. Okay, I did just get a couple errors that OBS was my streaming services going a little difficult here, but let me look at some of this healthcare name. So I've written about LifeMD. So there's nothing technical about this chart that's any good. This is terrible technicals. Like death cross below the 50-day moving average, and then every time it touches up against the 50-day moving average and fails, it's more likely to break down and crash. But it has an interesting story. The story between this one is and I have an old write-up on this one on the Substack, they had a partnership with Medifast, which is a gig economy Weight Watchers type competitor, and they are getting their clients to download the app, but unless they have assurance that their insurance covers Wegovy, they're not becoming paid subscribers. So downloads have tripled and revenue stayed flat. Management promised that by the end of this year, when you open the app and plug in your insurance, you're going to know with certainty whether Wegovy is going to be covered or not. But the technicals, oh wow, that's even so. The opposite of a hammer candle is a hanging man, and that's a hanging man candle. It's not quite oversold, but just terrible technicals. One of my former students, Mitch, is better at technicals than I am. I can already tell he would say just avoid it like the plague. Every time it tries to cross the 50-day and fails, is more and more of a chance it's going to break down. It's tried 3 or 4 times to cross the 50-day and failed, and now it has a hanging man. Yeah, this is a terrible chart. I just like it fundamentally. Teladoc. Teladoc has a pretty nice, it's going to have a golden cross within a week or two. And, you know, it's making some nice positive, you know, you had this, you know, quintuple bottom, and now you have kind of escaping this channel. You're about to get a golden cross. It's not overbought. and the MACD is not very helpful, but it's often not very helpful. Beautiful, beautiful. I really like Teladoc here. Let's see. CCLD, small cap healthcare, kind of cheap, like Teladoc more. Matt joined late. Okay. There's another healthcare company I'm writing about, or just wrote about, paywalled, and I had a call with the management team, with the co-founder. I talked with the founder and one of the co-founders and the chief operating officer and the CEO, and that write-up will be coming out Monday. And it's very small cap, but I really like the I really like it. But Teladoc has an amazing chart. What other healthcare stocks have I written about? So I haven't talked about this one in a while. Perspective Therapeutics. Oof, terrible chart. It had the golden cross that did nothing for it. Was this the day that Albert Bourla was in the Oval Office signing deals, and it became overbought for a minute and then broke down? Gosh, this has been just a terrible dog with an awful chart. They have alpha radiation as opposed to gamma radiation for cancer treatments. They have anyway. And then there's Ars Pharmaceuticals. Oof. I thought this was going to be the breakout escape velocity, and it didn't make it. It just came crashing back down. But it does have a very nice hammer candle on the day. I mean, the bottom might be in. How far do you have to go to get that price? So there's maybe, yeah, that's not a bad resistance line at about 7.5. Maybe that's a better one. That's already below that. Yeah, this thing is breaking through some resistance lines, breaking through some support lines, and not looking good. Terrible technicals. But so do I buy the things that I like better fundamentally, or buy the things with the better technicals? I think Teladoc is the answer. I need to refresh my fundamental evaluation, because they had last time I checked in on them, they had a new CEO. I need to see how he's doing. But as far as sectors go, consumer staples I can't do. It's just not enough torque. Real estate, it's so hard with the deportations. Materials, I can't buy metals and mining, except for the one mining stock I'm buying is Taseko Mines, symbol is TGB. But aside from that, I can't buy metals and mining. Maybe packaging and textiles, and chemicals are in such a bad way. Energy, I own so much, but oil services now, or natural gas services, are part of the AI theme. Healthcare has great technicals for small cap healthcare. Consumer discretionary I talked about, and financials I talked about. Utilities I probably won't touch. It's kind of in there with REITs for me. Industrials. So they say industrials are doing well, but my industrials aren't. Go back 5 years. Small cap industrials have kind of been the exception to, if I just compare this to IWM. Right, I mean, the Russell 2000 was, had this massive drawdown. It stayed down for so long, had that terrible crash into April, from December last year into April, and then it's finally broken out to new highs. But if you compare that to small cap industrials, if all you did was own small cap industrials, you had just a much better journey through that whole period. But they've kind of lost some momentum now, and I don't know if it was the they bounced back out of the April lows, and maybe tariffs are finally dragging on them. Let me see. Yeah, it's getting to the point where it's either going to break up or break down, but the chart doesn't tell you if it's going to break up or down. It's just going to break somewhere. It's either going to break up or down, but you don't know where. Go into the 3 months. Like, this is an inside day where the whole candle is inside the other one, but this one's a bearish candle. That's a bearish candle, so it's it's an inside day on bearish candles, and it's not as well behaved staying above the 50-day moving average. It's spending some time below the 50-day moving average. You've got, there's not a lot to like here. There's not a lot to like at all. Which is kind of normal. Sometimes the things that have done the best, they are due for some mean reversion. So the question is, do you get mean reversion, or do you get momentum to continue? I think I found my answer. I think out of sectors, I like consumer discretionary and small cap health. Yeah, let's see. I think I've been live streaming over an hour now. Do I have a Twitter account? Yes, I am primarily chatting on Twitter. So it's unemployed small cap value degen. You'll see my eagle, and I'll have my blue check mark. My favorite oil rig oil service. So Sampa's asking me about my favorite offshore oil rig oil service. You mean onshore or offshore? The onshore one that does rigs instead of frac fleets is Ensign Energy, right? They've got, and that's a great chart. Great chart, and it just had a golden cross. Yeah, that's such a strong buy. It's beautiful, beautiful, beautiful chart. That's onshore oil rigs. Offshore, when I first wrote about Transocean, I didn't know that Noble had that anchoring shareholder from the Maersk family. And I liked that Transocean had a large shareholder sitting on the board guiding their decisions to not do stupid things. And I come to find out Noble also has the Maersk family doing that. And then John Fredriksen's bought into Valaris. So now they're all pretty equal on having a large anchoring shareholder to try and keep management from doing stupid things. So they're very equal in that way. And they weren't equal when I first found Transocean and first wrote about them. They weren't equal in that way, but they became more equal in that way. Transocean still has debt, and if we hit an inflationary environment, that debt is an asset that gets, the liability gets inflated away, and they benefit from that. So that's more torque, more financial leverage. I don't like jackups, and I think both Valaris and Noble have a mix of jackups and deep water. I like Transocean because it's purely deep water, and I'm not as into jackups. And then, so yeah, I like Transocean, but I put Noble in my wife's Roth IRA because of the dividends, she doesn't have to pay tax on them, and they're set to automatically reinvest anyway. And it's much lower risk, much happier company, nice dividend yield. I think Noble's going to be fine. So I put that in my wife's Roth IRA, but I own Transocean for myself. And Valaris just has too many jackups. Petrobras, what are my thoughts? So I haven't written about Petrobras either ever or in a long time. They're definitely getting dragged down by the oil price and by Brazil, being Brazil, and having Lula in charge. Oh wow, the bigger the base, the bigger the breakout. But it did have quite a run from $3 to $13. 75 billion. I mean, it's 9% forward dividend yield is attractive. So Tom Lee of Fundstrat talked about a commodity producer that hired Palantir, and it dramatically improved their profitability overnight. And the rumor is that the commodity producer that Tom Lee was talking about who hired Palantir was Petrobras. And some of the information about that was, for example, their hedging was a cost center. It became a profit center. Their hedging went from costing them money to adding money. It's going to dramatically increase their profitability as they found all these areas of inefficiency where they were losing money. If that's true, if Petrobras hired Palantir and is about to dramatically improve their profitability, then it would be a raging buy at this price level. But I don't have confirmation that Petrobras is the company that Tom Lee was talking about. But I think that's the rumor, that's the suspicion, is that it was Petrobras who hired Palantir and is about to experience a dramatically improved profitability. But at a 9% dividend yield and a good chance that November of next year you get Lula gets replaced by somebody, or even if he doesn't get replaced, at least he behaves better because he's afraid of Trump now for a few years. It could be interesting. I might still prefer EcoPatrol. I'd have to go to my write-up on EcoPatrol, and you just have to see how much other stuff do they own. They own so much stuff. Let me see if I can find my EcoPatrol write-up. We're talking about toll roads, power generation lines. I think it was called Gorilla Presidents and Cocaine Hippopotamuses, October of last year. Come on. If you just look at all the stuff they own, yeah, there we go. So they have toll roads in Chile. They have telecom in Argentina, Chile, Peru, and Brazil. They have commercial office space in the US, in I think it's Texas. They have electricity transmission in Peru, Bolivia, Chile, and Brazil. They obviously have oil, midstream, and refining. And I think they have some offshore stuff in the Gulf of Mexico. They have some office space in Singapore. Like when you see how much stuff, because what happens is when the communists are in power, they prevent any return of capital to shareholders, so EcoPatrol just buys more stuff. And they bought so much stuff in South America, and South America is about to have this enormous renaissance of, again, capitalist elections sweeping Argentina, capitalist elections sweeping Bolivia, capitalist election sweeping Peru. And then I'd have to read my own notes about it, but I think Chile, who's next? Chile and Colombia, and then Brazil, I think. It's like November, May, and November again. So within the next 12 months, you've got 3 more elections, and everybody's looking and seeing how successful Malay was, and all the young people are going just nuts. So I still like EcoPatrol, even though Petrobras, again, probably is the one that hired Palantir and has this enormous improvement. But if you look at all of EcoPatrol's assets, then the oil price can improve, but then now also economic growth in the southern South America is going to benefit them in so many ways, right? More electricity going through their power lines, more cars on their toll roads. Anyway, let's see. Well, it's been over an hour, so I'll probably end the live stream here. Tomorrow I'm still going to do my paywalled what am I buying this week. The purpose of this live stream was really to look at these sectors and say, what sector do I want to focus on? Because I needed some soul searching, I needed some introspection. And looking at PSCD, consumer discretionary, you know, I think it has a good chance to bounce from here. We're still in an interest rate cutting cycle. Consumer discretionary, and I showed you guys that chart from Warren Pies. I'll bring it back up again if I can find it in a reasonable amount of time. So that chart from Warren Pies has, so the NFP non-farm payrolls from August. So when the August NFP came out, everybody looks like they went in their portfolio and they said, you know, okay, are you attached to AI? No, goodbye. And they sold everything that was not attached to AI, and they just bought things that were attached to AI. And that's been happening since August non-farm payrolls, the beginning of September. And now I think consumer cyclicals are oversold. I think they're a buy now. So if I go to consumer discretionary, consumer cyclicals, it's, you know, it's bouncing off the 200-day moving average. It's oversold, and it's got a volume spike on a crash. Those are good signs. I think I like consumer discretionary. I like small cap health very much, with the golden cross about to happen, and small cap staples is also extremely oversold and probably due for a bounce. I just hate staples so much, but somebody did tell me about a European frozen vegetable company. I have to look up the ticker. So Kelvin is saying no NFE discussion. So New Fortress Energy, again, they're they went to the UK and they're doing a debt restructuring in the UK. The debt restructuring in the UK is more favorable than in the US. So it still shows Wes Edens is smart, he knows bonds, and he's hustling and he's fighting. So it's not hopeless, it's just not good. There's nothing about this that is good, but it's not hopeless. Also, they have a plot of land in Pennsylvania on a natural gas pipeline that they're prepared to try and get a data center client to lease it from them and to supply the natural gas for them. Because of the Puerto Rican PREPA, the Puerto Rican Power Authority, buying the power plants, they had already bought the replacement turbines for those plants, and so now those turbines are sitting in a warehouse. So while GE Vernova is saying it's a 5-year backlog to get gas turbines, New Fortress Energy owns some already. So they own some turbines, they have a piece of land in Pennsylvania on a pipeline, and they're looking for a data center client. And there was some recent filings that make it seem like maybe they found a client. So New Fortress Energy could announce tomorrow that they have a contract with a data center client for a 20-year natural gas purchase agreement, and it would spike to $10 a stock. They could also announce tomorrow that they did a debt restructuring in the UK, and equity holders are completely wiped out to zero, or equity holders are wiped out to 50% dilution or 20% dilution. It really could go either way, and it's kind of a flip of the coin gamble at this point, because they're burning through their cash too quickly, and they don't have a contract in hand to factor or to use as anyway, it's an ugly situation. For whatever reason, Nicaragua keeps getting delayed, and then Puerto Rico seems to be delaying on purpose, maybe out of spite, maybe trying to bankrupt them. And then for whatever reason, what is it called? The FEMA has not paid them the reconciliation process. So it's ugly. I'm not banging the table on New Fortress Energy. It's really a flip of the coin. But still, half of me says don't count Wes Edens down and out. He has a huge percentage of his net worth tied up in this company, and it's definitely not over. So we'll have to see what happens. Yeah, anyway, but this has been going on for about an hour, so let me thank you all for coming and say have a great weekend, and I'll still put my regular weekly paywalled video on Substack. So again, this is the Unemployed Value Degen, and I hope you guys have a great day.